mean, Doc, the bottom line is, at least as I see it, is you're not going to get any traction or real something to build off of in the NASDAQ until Apple gets traction of its own. It's what is it? I don't know. Is it 11% or something like that of the 100? It's the biggest stock in the market. If the biggest stock in the market, and certainly one of the most popular, can't get traction in its own right, then how in the world is the NASDAQ going to start moving higher?
And maybe the NASDAQ doesn't for a while, Scott. I've contended for weeks now that we're likely to see this continue until the end of the second quarter, that Apple and many of its mature tech competitors, whether or not they make iPhones and iPads and computers, but the other mature tech stocks are likely to be pretty sideways between now and the end of June. From there out, I think you might see some outperformance out of this, but short term, yeah, I think the fact that the vol is only 1 or 2% off of its lows of volatility, to me says that it's just smooth over the next several weeks, maybe 6 weeks, Scott, and then we'll see what it looks like after that. I suspect, though, that those others that I mentioned, and you've seen it in the retailers, it's not just the cryptos, Elon giveth and Elon taketh away. It's these, North Face with VFC or KSS or any of these this week, Ralph Lauren, that have had, just spectacular dumps after their earnings were reported. And yet a number of the other retailers were flying high. So when you look at that, it says to me that that's the difference between, just mature tech and some of these companies that are so exposed to the reopening, in particular, of their stores.
That was the biggest, most, I guess you can use the word, Rob, distressing sign, wasn't it? And we knew it at the time because we talked about it at the time, that you had so many of those FANG stocks, the mega cap tech stocks, absolutely knocked the cover off the ball in their earnings. I mean, you couldn't get any better than some of these reports were. And the stocks did nothing. We should have paid closer attention to that, to think that maybe the after effect of that, Rob, was going to have a run-on effect, and it was going to last for maybe longer than we thought.
Mm-hmm. Well, I think we were there. We were talking about this rotation for a little bit, Scott, as you know, on this show, and you have to kind of look for market price action to see when there's a change. And granted, 1 week does not make a change in these names, but I think if you're a long-term believer in these strategies, as we still are, what we're saying is put some of your assets, or keep, in this case, some of your assets in high-quality tech and look for alpha in some of the places that we've been talking about that are positively exposed to the economic reopening, like energy, that had a rough week, energy, that are also positively exposed to rising rates, like financials, right? And that are positively exposed to some level of inflation, like materials. So we are more barbelling our orientation. I don't think in the environment that we invest in, which is individual investors, that you can completely take all your weight off the one side of the portfolio. And frankly, at the margin, adding when it looks like there's better price action to the highest quality names. I would argue Google is more exposed to the economic reopening than probably any of the stocks that you could be invested in that space. And it's been one of the best performers. So you got to be surgical, you got to be thoughtful, and that's what we're doing. And then you got to think thematically. We're talking a lot. We added Bitcoin today. It was down 10% when we added it. I don't know where it is right now, but the reality of it is you have to use volatility to express your long-term themes.